Better be careful, or you're gonna get suicided.
That's right. No, I didn't say it about the Clintons. Hello, we're talking about insurance contracts. Let me take this mask off. All right. Okay. So every insurance contract has a declarations page. Okay. And when you see property, you're thinking property casualty insurance. Or activity, which is liability or life. Okay. The information on the declarations page used primarily for underwriting. And it's usually the first page of the policy, the declarations page. And it'll say at the top, declarations page. Okay? So in property insurance, it contains the person who has taken out the policy. Okay? The location of the property, how long the policy runs, okay? The amount of insurance or the amount of coverage, the limit of coverage on the property, what the premium is, and what the deductible is. Okay? When a truck kicked up a rock that hit my windshield, I called Blake and said, I need to file a claim? He said, your windshield deductible is $250. I said, I'm not filing a claim. I can get it fixed cheaper than that. All right, every contract has a page of definitions. Okay? And this helps the consumer understand what he or she is agreeing to and what the insurance company is agreeing to. Turn this around, make sure that we're on. Okay, hello. So, and by the way, I think on Thursday, we talked about promissory estoppel, right? On Friday, I got a call from my lawyer. And our case has been scheduled for March. So we'll see. I thought that was an interesting timing that I had just talked about that case. Promissory estoppel. It's a real thing, man. We'll find out how real it is. All right. So the insuring agreement summarizes what the insurance company is going to do. And the major promises include the claims that they're going to pay, and then any other services they might provide to you. Okay? All right. So, two forms of agreement that you need to be familiar with. One is called named perils coverage. Okay? Only perils specifically named in the policy are covered. So there is a list of items, causes, that would be covered. So if property is damaged by a peril or a cause that is not specifically named, you're out of luck. Okay? Open perils says that everything is covered except losses that are specifically excluded. Okay? So you're better off with an open perils contract than a named perils contract, unless there's something that's excluded that you're really concerned about. All right. So, as we see here, life insurance is open perils except for the contestable period for suicide. So there's a period of time that life insurance, if someone commits suicide within a contestable period, then the company's not going to pay. Otherwise, if it's outside of the period, they will. And then certain hazardous activities. Like if you fill in that on your application that you do not do skydive and you die in a skydiving accident, you're not going to be covered. Okay? Because they would have charged you a different premium if they knew you were skydiving or piloting a plane. Right? And war is excluded. Okay. All right. Okay, 3 major types of exclusions that the companies put in. Okay. So, flood, which is covered by the government, a partnership between the government and the private sector, backed by the government. Okay, it's social insurance. And then intentional acts are never covered. Okay. And then earthquakes. Okay. These things cannot be predicted, and when they happen, the damage that is caused is too large. The government is going to step in, declare a natural disaster, and there's going to be government help that comes in. All right. Professional liability. So a loss from a professional liability, and you think about doctors first when you think about professional liability, okay, are excluded from the homeowner's policy. You have to buy a separate liability policy. Okay. There are certain property, like pets or other items that are on the property that require special coverage. Okay, there may be 3rd or 4th cars, planes that are parked there, boats, okay, that your homeowners will not cover. Okay, it requires special policies that go beyond the scope of a homeowner's policy. By the way, y'all remember Caitlin? Were y'all ever in class with Caitlin? Did I tell you about they did the estate auction last week? Yeah, her dad had an unbelievable amount of toys. Did you know Caitlin, Madeline? Did you ever meet her?
I think so.
Yeah. Oh, if you met her, you would remember her.
Yeah,
she was something else. He had a couple of planes, passenger planes. He had a couple of crop dusters. He had 8 motorcycles. He bought a Cadillac from the movie Secretariat. It's a pink Cadillac. And I actually bid on something. She sent me a picture of the cars for sale, and she said, see the pink Cadillac? He bought that from the company that filmed Secretariat, the movie. Has anybody seen that movie? Oh, it's a great movie, man. And it's about the horse, the racehorse. And I called her, and I said, I'm not interested in that Cadillac, but I'm real interested in that Triumph TR6, that white Triumph TR6. So she gave me the name of the company that was doing the auction, and I bid on it. And it started at $5,000, and I bid it up to $7,750, and it went for $9,000. But that was sight unseen. I might have bid more on it, but I didn't know what kind of condition the car was in. You know, there were people there who knew what condition the car was in. Anyway, that was crazy. Caitlin's something else. All right. So there are just some perils that cannot be predicted accurately, cannot be priced economically. That's why they're excluded. All right. And so anytime you're using a vehicle to do business, your private coverage doesn't cover it. And so I had a couple of Chinese students that wanted to start a business. They wanted to start basically being a taxi service for the Chinese students who were going to the airport. And I called Blake, and he said, don't tell me about it. He goes, if I've got their personal coverage, I don't want to know that they're using it as a business, because there's a certain number of trips they can make. Beyond that, they're not covered. If they have an accident on the way to or from the airport, I can't cover them. They'll be excluded. Okay? So that was one impediment to creating the business. Michael Fu wanted to do it. I don't know if you know Michael.
Yeah.
And but anyway, it was cool. It was a cool idea. All right. So if you have property that's covered on a separate contract, then you're not going to have coverage on other contracts. There's not going to be redundant coverage. Okay? That's what they're saying here. If you can get coverage through other means, then they're not going to cover you. All right. And again, it's so difficult. Aircraft is a really specialized area, and they're not going to offer aircraft coverage as a, it's kind of like what happened with the Obama administration and the Affordable Care Act with their plans. People looked at the plans and they said, why would a man pay for birth control? Okay? Why would a young person pay a premium to have coverage in the event of a knee replacement? You know, people were asking those questions. People didn't want to pay for services they weren't going to use. Okay? And so, I mean, if you include something like this, then it just makes the policy more expensive for everyone. Okay? So you want an aircraft coverage, you've got to get a separate contract. All right. Okay. So limitations on the insurer's promise to perform. Similar to exclusions. Similar to exclusions. Okay. So this is where representations and warranties come into play. The duties of the insured. If the insured does not live up to their representations, then the insurance company doesn't have to pay up. Okay. All right. So if you promise to have a sprinkler system that is adequate and turned on and working, and it's not, then your fire claim is not going to be paid. All right. So common duties. The notification of the loss. If you're a property owner and you have a loss, you have to contact your insurance agent immediately. Okay? And then protecting the property after the loss so that it doesn't get worse. Okay? So if you have a car wreck and the windows are busted, you got to put it in a closed building. If the car's not been totaled, you don't want to leave it outside and it starts raining and all of a sudden now you got to replace the interior too. Okay? And then again, with subrogation, you have to cooperate with the insurance company. You'll be a witness that'll be deposed in a lawsuit where the insurance company is trying to recover damages that they paid for. Okay. All right. Other provisions, the causes of cancellation, how cancellation will be handled, subrogation, okay, the right of the insurance company to try to recover from a third party that is liable, and a grace period, which is how long do you have after the expiration date of your policy to pay your next premium. Usually it's 30 days. Okay? And the misstatement of age on a life policy or a health insurance policy. That's really important. The correct age how you handle the age is really important. And we'll go over that, what happens with age mistakes. All right, so who is the insured? Identify the persons or parties who are insured under the policy. And remember that with property casualty, a person takes out a policy on a piece of property in which they have an insurable interest. Okay? So it's still a personal policy. I take out a policy on my car. I'm the insured. My car is the property that is covered. If I sell my car, I must notify the insurance agent, and that car is no longer covered. And I got a letter in the mail from the Department of Motor Vehicles telling me that I had to provide proof of insurance for a vehicle that I sold, because the guy I sold it to, which was my mechanic, has not transferred the title. Even though I transferred the title to him, he has not filed it with the Department of Motor Vehicles, and so they still think that I own it. And I got a letter saying, you're going to lose your ability to drive that vehicle if you don't provide proof of insurance. It's not my car anymore. So I had to call the mechanic and said, dude, well, you know why he hasn't turned in the title yet? What happens when you turn in the title? You got to pay sales taxes on it. All right. All right. So you have the named insured, which could be more than one person, okay? And the first named insured has some rights and responsibilities. Nothing really big, but... So, if you're a named insured, you get any premium refunds. If you're the first named insured on the declarations page. But you have a responsibility. Also, you get the any claim payments. And I told you about my friend who wrecked his car. And his mother was the named insured. Great. All right. All right, so you can add another insured to the policy, but there has to be a special clause that is set up and called an endorsement. A statement where this person is added. And any time you add something to a policy, almost any time, your premium is affected. They don't do anything for free. Nothing for free. Okay? Thought it was interesting. Blake said they run $5 million worth of premium through his company. I think he said they pay $500,000 worth of claims. That doesn't sound too bad. It doesn't sound like a bad business model. $5 million in premium, $500,000 in cost. Man, if you were manufacturing a product, you'd take that in a heartbeat. All right, everybody up to speed with me? All right. Speaking of endorsements, property liability insurance, and they call it casualty, but it's liability. An endorsement is a provision that changes the contract. Oops. Okay? It's something that changes the contract that both sides agree to. An endorsement. All right, so if you want coverage for earthquake, then that has to be an endorsement that's added. And you're going to have to pay for it. All right. In life and health insurance, it's not called an endorsement, it's called a rider. And I'm sure all these things have a history. There's a reason behind every term, just like Blake was talking about underwriter. I thought that was cool. Where did that term come from? Underwriter. Okay. Waiver of premium rider is common on life insurance and on disability insurance and on health insurance. Okay. Waiver of premium. Someone who is disabled does not have to pay premiums while he or she is disabled. Okay? It lowers your stress level. If you're disabled, your income is down. Okay? All right. So, we know what a deductible is. Let's look at the detailed definition of it. A provision by which a specified amount is subtracted from the total loss payment made by the insured. The way we view it is the first $500 is going to be paid by you. So what they're saying is, if the loss is $2,000 and you have a $500 deductible, then the insurance company is going to say your payment is $2,000 less your deductible, it's $1,500. The way we look at it is, this is going to cost me $500. And anything under $500, we're not going to file a claim for it. Because if you file a claim, chances are they'll increase your premium next go round. So there's a cost to filing a claim. All right. And so that's something you have to talk to your insurance agent about. Okay? Every time something happens, you call your insurance agent, say, here's the situation. Your insurance agent, particularly when it comes to property damage, they're going to send somebody over. You're going to get an estimate of the cost to repair it. And then you visit with your insurance agent. How should I handle this? You know, what are the implications of filing a claim? Should I pay it out of my pocket, or should I file a claim? Okay. So, small claims are expensive. The insurance company still has to send an adjuster out. Okay, so they want to eliminate the small claims. It's just time and effort that they don't want to have to deal with. Okay? And when you make a deductible adjustable, a range, then you allow people to customize. You allow people to decide how much risk they're going to retain and how much they're going to transfer. And the more risk they retain, the lower their premium is going to be. If people don't have a deductible, then they might have morale risk. Okay? All right. There are no deductibles paid in life insurance and in liability. These are called valued policies. I think that might be on here. No? They're called valued policies. The value that's paid out in life is based on the amount of coverage you have. And in liability,